Today is the last day of our financial year, and we are tremendously excited to present the outcome of what has been a tremendous and a real transformative year. We've spoken a lot about La España. We exited that investment. We generated a profit of 82 million euros. That generated an IRR in excess of 40% for shareholders. The proceeds of the La money, together with the proceeds from our capital raise in September 24 of 1.5 billion, and then also the drips that we issued during the year, which came to around 800 million, allowed Vukile to really grow the business dramatically this year. So we entered Portugal, initially acquiring 3 assets for 176 million euros. We then followed that up with a 50% acquisition of Allegra Sintra, also in Portugal. So we now have 4 assets in Portugal. A few weeks back, we closed the Bonaire transaction. That's the centre in Valencia for 305 million. And when you put all of that together, over the course of this past year, we've grown the asset base in Castellana by around 60% to 1.6 billion, and that's pre-updated valuation. So you may see a different number when full year results are out. But you can see tremendous growth in Castellana's direct business. Today, it's 100% direct assets, as is Vukile, 100% direct assets. Very important to highlight that all of the acquisitions that have been made have been fully funded. They're accretive. There is no cash drag. And most importantly, there is no further equity funding requirements. Operationally, we've had another very strong year. Itu and Alfonso will take you through the detail. Itu in South Africa generated like-for-like NOI growth of 6.4%. And importantly, we see that trending upwards in the year ahead. Castellana generated NOI growth of 2%, and that will also trend upward. Now, remember, that number was held back by some of the value-add projects that were being done during the course of the year. Those are now complete, and you'll see the benefit of those coming through in financial 2026. Just to also clarify that our free float has now increased from 91% to 97%, and that was effective from the 24th of March 2025. Overall, I'm very pleased to confirm our guidance for financial 25 of growth in FFO per share will be between our original guidance of 2 to 4%, and our growth in dividends per share will be 6%. Just to say that all the numbers we're talking about and what we're going to go through now are based on 11 months actual to the end of February, and then obviously our forecast for the month of March, although we're very confident that all the numbers will remain as we are going through them now. There's no question that the yields in Spain and Portugal have tightened over the last year, probably by about, I'd say, 100 to 150 basis points. And you can see from the yields at which we've purchased, they're well ahead of where the market is. And I think that sort of is testament to our investment approach. At year end, we expect about 65% of our assets to be based in Iberia, 35% in South Africa. And I think when we talk about a transformative year, you can see what this really means in terms of the whole shape of our business, sort of moving more offshore than onshore in terms of size. In the year ahead, we would expect about 60% of our earnings of our NOI to be coming from Iberia versus 40% in South Africa. We've grown the Castellana asset base by nearly 60%. It now accounts for 65% of the group GAV. But it's very important for us to allow time for the team to focus on integration, optimization, and crystallizing value from these assets. I think what you've seen over time is the Castellana team's ability to drive value from the assets through better leasing, through value-added projects, etc. And all of these assets that we've bought have been bought specifically because we believe there is value to add to them. None of them are what we would call dry assets. They've all got the potential for further growth and expansion. But I think the focus now, as I said, is on integration, optimization, and starting to crystallize those plans to extract value from the assets. And as such, we're not looking to actively close new deals in Castellana until such time as we're confident that the new assets are fully embedded into our processes. That being said, we're always going to remain open to consider opportunistic deals as and when they're presented. I'm going to give you guidance for FY26. We normally do that only in June when results come out, but we've just finished our budgeting cycle for FY26. We've been through our various governance processes, and we're very happy to provide preliminary guidance for FY26 of growth in both FFO and dividend per share of at least 6%. Now, that is based on two key assumptions: a Euro-ZAR exchange rate of 18.65 and no further interest rate cuts in South Africa, but two further Euro interest rate cuts in FY26. Obviously, we'll confirm tightened up guidance in mid-June, and that will largely be driven by the exchange rate. But the operational side of the business is clear. We know where those numbers are, and very pleased to forecast accelerating growth in the year ahead of at least 6% in both FFO and dividend per share.